we have a paper that really summarizes where we think R&D is going to be over the next 3 horizons in financial services. And the motivation for this is that in many ways, we are a technology provider into financial services, as IBM is. And as a technology provider, for us, we got into this, I had to set a little bit of a historical context for this. We have been traditionally, heavily into transaction processing. And finance industry, if you think about any major transactions that finance industry is involved in, it's massive scale. Just to give you the numbers, the number of Google searches in a day would be about 4.5 to 5 billion. The number of what we call KICS transactions that happen in our transaction processing platform is 6 times that, right? It's massive, and these systems have to work so reliably that the mean time between failure is measured in decades, right? That's the level of reliability you need in transaction processing. But you still need all of that, but the industry is moving on. I mean, you need all of that data, but now you find customers coming in through many different digital channels. They want to be able to use mobile to interact with banks. And the banks themselves have to not only look at economic pressures, cost changes in the industry. So for example, if I walk into a branch in the United States, it costs me $4 a transaction. If I do it mobile, it's 2 cents to 9 cents. You see the orders of magnitude? So therefore, the digital shift is very real. So given where we were in the transaction processing space, and with this new digital shift happening, the whole idea was to look at challenges and opportunities in the industry that we could not just address it by ourselves, but collaborate with many entities. And we typically, at least from IBM research, we have always worked with academia, government agencies, as well as with many of our clients around the world. Because this thing cannot be solved alone. This has to be done in a collaborative spirit. So that's sort of the backdrop for this as to how we looked at it. And I already went through this in my morning as to summarize what the financial services is all about. And we actually work across the spectrum, from banking through financial markets to insurance. And in fact, just to give you a rough sense, if you look at the top 100 banks in the world, you'd find about 93 or 94 of them would have some variation of our systems in place to work on these banks. So we are across the board in many of these entities. And as I was mentioning to you, if you look at financial services, it's so broad. But we have been focusing also on functional services where return on equity is very high. So if you look at wealth management and investment management, roughly the return on equity is 5 points or more higher than many of the other banking services. And so banks, when they think about these things as to where they want to put innovation, they carefully pick those places where they want to first target. And so it's important for us to understand what are the various themes that banks are really onto as they transform themselves. And that understanding then factors into what research makes sense, right? So one of the things I keep getting asked, and we've been asked many, many times, is what's so unique about financial services, right? And I have to give credit here to a number of people. This is not just only IBM. There's actually in Stern School of Business, Um, there's a number of professors, Michael Pinedo is one of them, and many others who actually have done some very careful thinking in financial services. And again, I want to use the analogy between manufacturing and financial services. In the manufacturing world, in research, in supply chain research, if you go and tell people about operations management, nobody will bat an eyelid. It's a well-known area, and over the years, people have looked at many different foundational capabilities to advance operations management, right? Meaning, you take, for example, unreliable components, put them together, and how do you create a reliable system? People know this, and people have worked on it. In finance industry, this seems to have completely been missing. So if you look at products and services in financial services, ask about component commonality among products and financial services, and you will get a blank stare. What do you really mean, right? So there is a space. If you're thinking about research, I would submit that bringing in really well researched, validated concepts of operations management into the financial space, as the banks are trying to rationalize and transform their back office, not just front office. This whole space of financial operations management becomes massively important. The architectures, the API services, and so on. So when I look across these characteristics, most of them are obvious. Fungibility of products and services. Now, we talked about SMEs quite a bit, right? Small and medium enterprises, all day today. Go into most of the banks. Ask them, what are your unique products and services for small and medium enterprises? And you will be hard-pressed to find them. Because the reason is, many of the banks either stick the small and medium enterprise into retail banking, if they are in the distribution of the SMEs in the tail end of it, then it fits there, or they put it under corporate banking. And some, like ING, for example, to pick a European bank here, since we're here, they struggled with both ends, and they finally decided neither fits. So they created a separate business unit called MidCorp to offer services to SMEs. And it goes back to this whole notion of product management, right? What is the discipline around product management, right? This is an area which requires quite a bit of, I think banks could benefit and financial services could benefit from looking at. Heterogeneity of customers or clients, this cannot be underestimated, right? Because, when people talk about banking, it's very fashionable to talk about retail banking, because that's where many of the banks collect a lot of fee-based revenue still. But when you look at the corporate and commercial banking, especially you go towards Asia Pacific, you're looking at, a massive distribution of family-owned companies and others. So the number of clients and customers of different makes and shapes is huge. So one of the key questions is resource allocation. If you have only a few resources for relationship management, how would you allocate them to serve all these clients, right? A lot of the recommendation engines and capabilities like that we hear quite a lot in the commerce world applies there as well, right? And then customer relationships are long-term. I mean, this is an important thing, especially when you talk about the investment management side with institutions. The relationship management has to be, considered as a long-term relationship. And so relationship management has many attributes and KPIs. It's a multi-dimensional problem of how you do that and how you manage that. Global distribution channel, and I give you a classic example. In Australia, for example, you can walk into a bank and you get financial advisory. They call it superannuation. In the United States, we call it 401k, right? Our retirement plans. So the banks would give you advice. There is another category not in Europe, and not so much in Europe or in the US, but definitely in Asia and Africa. It's called bank assurance. Insurance companies use the bank's sales channel to sell insurance products through the bank, right? So in that kind of a setting, what happens is whatever financial advisory is given has to comply with business controls as stipulated by regulatory agencies. There are safe harbor provisions against which you compare. Why I bring this up is because you may think, oh, that's, we can formulate it as a nice problem and look at NLP and an ensemble of models and figure out how to address it. But here's the challenge. The agency, the distribution channel that the banks use to offer these services, it's not all owned by the bank. There are many different agents who are all, on their own, and they're part of the distribution channel. So how do you assure quality assurance across this distribution channel? Right? Now, we know in the supply chain case with Amazon and Walmart and others, they worry a lot about quality assurance and control and the expectation of a certain digital experience. In a financial services world, it's equally important, right? And so this is another interesting characteristic of the thing. Significant regulatory oversight, we have touched on that. There is a massive convergence on in terms of how banks and other financial institutions are selling things into the market. The convergence of sales, marketing, and operations coming together because they want to actually aspirationally have hyper-personalized experiences projected to their customer. So that would require convergence. And then, of course, Christoph touched on it, and I think Natalie is not here. She touched on it in the morning as well. Increasingly, you find financial services really weaving themselves into many different industry ecosystems because finance is what actually, greases the skids, so to speak, in many of the industries. And usually they have had business as usual models which are not very good, very siloed, broken. Increasingly you find some really very modern, which is being explored here in Europe, like payment rails for connected objects, like cars with e-wallets in them, for instance, right? Those are where financial services is getting folded into automotive industry. And so like that, we see a lot of that. And this is not a good thing, but finance industry is the most targeted industry for cyber crimes. So we have our X-Force within IBM. We actually do a survey every year, and finance industry comes out top in most complicated and sophisticated patterns of cybercrime being done against finance industry. So these are all many factors. And on the left-hand side, what I'm showing here in the picture is, there is a squeeze, so to speak, between cost pressures, technology disruptions, and regulatory changes. And that squeeze from all sides is actually forcing banks and financial institutions to start reimagining themselves. They have to, right? It's probably a cliche by now. Many people would say, you would still need banking, but we're not sure whether we need banks. But that may not come to pass, but that may be stretching it a bit far, but you get the general gist of it, right? So then when we talk about innovation themes, we don't have time to get into all of these things because you could talk a lot about each of these themes. So this is based on, what we are sharing here is based on our market analysis of the financial services globally as to what we see. And we have organized it based on digital transformation themes and innovation horizons. This horizon 1, 2, and 3 is not our terminologies. I'd give credit to McKinsey because they're the ones who talk about always horizons 1, 2, and 3. Horizon 1 is think of it as 1 to 1.5 years. 2 is anywhere between that and 3 years, 3 to 3.5. And horizon 3 is out there, right? So just examples. When we talk about horizon 1, this is what we invariably see immediately, right? All the front offices of many of the banks and financial institutions are completely transforming or transformed already, right? They've got Omni-Channel by which you can interact. Digital experience is sort of default for many banks, especially in many of the African countries. The only way people know how to deal with the bank is through mobile, right? So this is what we see here with Seamless, is digital omni-channel engagement, right? And that, by the way, is not about conversational interfaces. There's a lot of deep AI work around conversational interfaces you can think about. But it's much more than that. You need to have a data-driven approach to make this digital experience, because the last thing you want is a really useless chatbot that you're interacting with, right? Doesn't add any value and creates a lot of nuisance. That's not what we want. We really need a capability that looks at not only who you are, but also who your cohorts are, and you be able to offer things which are meaningful to you. Like, for example, the recommendation engine of Amazon, right? It uses a whole range of techniques under the covers. Collaborative filtering is a broad umbrella. And roughly the Amazon revenues that are attributable to the recommendation engine, 30%. That's how powerful these things are, right? That's what we mean by the seamless thing. Then, of course, once you start doing that, the next step up is, you want to modularize your functions in the bank as a service. Here's where the rich discipline of service computing comes in. There are architectures in the banking world. Some may not be as popular, depending on how you pronounce it. BIAN or BIAN, BIAN, it's sort of one architecture out there. It sort of breaks down banking functions into APIs. But that modularity is very much needed also for partnerships, right? So if, for example, we talked about credit scoring, right? Let me take the SME example. So once you come in, an SME comes in, and the best characterization of this is given by the CEO of Alipay. And he calls it, the business as usual is, it takes 3 months to apply, 1 month to decide, and you have 0 chance of getting the loan, right? That is the truth for a lot of the SMEs, especially if you're on the tail end of the spectrum of the SMEs, right? Because of lack of data on these SMEs is one, right? But think about it, the credit scoring does not have to be a binary decision, yay or nay. What if the bank were to say, I can't give you the loan amount that you're asking for, but I have a correspondent network, banking network. There are these other banks, regional banks, who might be able to give you. And so I provide you advisory. Now that's a deeper level service. That's the kind of service we mean by this modular. It won't happen without the modularity. You need to have your back-end functions not all put together in such a brittle, monolithic way. It has to be modularized in order to do that, right? Then if we shift into Horizon 2, now what we're seeing is starting to embed some of these services, intelligence services, into processes or value chains where banks can offer higher value. That's what we mean by embedded. So you're beginning to see, end-to-end digital pipe. Classic example. You look at many of the banks like, ABN AMRO or JPMC or whoever. They're all creating digital subsidiaries. Now you might ask why. Why can't you take an existing process and modify it and do something? It goes back to what Ore mentioned in the morning about digital platforms. It's easier to construct these digital platforms as an all-new, as opposed to going in where there are a lot of people sprinkled in the process and convincing them, your job is going to be very different or eliminated, and now you're going to automate it. That's a massive, massive transformational exercise. And that's fraught with mixed results. That's why increasingly this embedded becomes very important. And banks and financial institutions are picking up select processes to implement it that way. And then you go a level up. Now we are getting into smarter. And here's where things that Emily was talking about starts to apply, where you're beginning to get more and more data purposed. Remember, even data within banks are very siloed. Even if you think of, for example, fighting financial crimes and fraud, they're not all sitting there nicely, all integrated. It's even worse when you're talking about dealing with customers, right? So being able to bring that data together and using an ensemble of AI models. And here when we talk about AI models, we have to go back to what Rong was stressing about DevOps. Because if you take a bank of an average size, it might have about 3,000 models, decision models, statistical models all today. Many of these are getting replaced with AI models. But you can't just put in any AI model. Regulatory requirements suggest that you need to follow a process. That it is what the industry calls model risk management. It's a very important risk category, and it's only going to go up. As more and more models become like very sophisticated and complex, the risk is only going to be more, not less, right? As decision intelligence is more and more automated and fast decisions are being made that cascade, more risk and harder time to debug things if you don't have a proper DevOps and a model ops, as we call it, right? We call it also AI for AI, which is what Catherine was touching on in the keynote as well. So that's the smarter part of it. And of course, in Horizon 3, where we want to get to, and this is a bit aspirational, is that many of these compliance and regulatory things, if you really look at it, how banks are implementing them, it's just throwing a lot of human bodies at it. It's very manual to even today. So can we get to a point where these things can be totally autonomous for at least well-curated set of processes and end-to-end pipelines? Is that possible or not, right? And those are kinds of things when we talk about autonomous capabilities, that is totally digitized. Now, we may think it's aspirational, but, Ore and I can tell you, for us being spending some time in Singapore, there are banks over there who think that's not aspirational, that's Horizon 1. Because they want to go after the masses and offer digital banking. And they cannot afford to do the digital banking the way that it's being done today. So it has to be totally automated. So that's what we mean by that, autonomous capabilities. Now you can see the spread, right? And we are just sort of oversimplifying it still, massively. But you get the drift. There is a whole class of research problems. They all apply at different time horizons and different degrees of value. And there's a tremendous opportunity for academia and industry to collaborate as well as getting regulators into this discussion as well. They need to be in the discussion from day one, not after we have cooked up things, because then they won't accept it, right? In fact, one of the things that is coming up closer to where our research lab is, in RPI, they are trying to create a center, a fintech center within the university that will be a collaboration of 7 universities jointly with NSF, our National Science Foundation in the US. And the whole idea is to get regulatory agencies like SEC and OCC and others in the US involved in the discussion at the research stage. Very important. And I think academia can do a great job bringing these regulatory agencies into the forum. And we need that to transform the financial services and industry, right? And I'm glad IEEE is engaged. And we want to get, as Michael said, a lot of his students are going into the finance industry. A lot of IEEE membership is only going to increase in the finance industry as data becomes important, analytics and AI becomes important, well-engineered systems become important, right? So the influence of IEEE can only grow, right, in this. Of course, in support of those themes, we just wanted to illustrate some of the technologies that come under the covers, because there's a whole slew of technologies that have to actually get developed and integrated and built to make this possible. So left to right, at the very bottom is what we call secure and trusted cloud platform. This has to handle data privacy and security, as well as, how do we come up with, well, as Catherine was saying, some of the more advanced architectures that allow your AI models and to run much faster, more reliably, those kinds of things, and API services management. And then you look at the processes and enterprise AI, and we touched on this in our panel. What we mean by enterprise AI are, as we would call in IT, the illities that you need in order to make something scalable and reliable, right? So things like you want to be able to demonstrate, you're addressing bias, either in your data or in your models. We know how to do that in, traditional models. We want to be able to do that in AI. Some biases are okay. I mean, they are being introduced because of business model considerations, but you want to be able to separate that, right? Do that. Then explainability is massively important. And here again, explainability, you have to take the perspective of the decision maker or the end user, right? It's not some explainability in general in the model, right? Things like that. And models have to be fairly robust, right? You can't put in models that people can hack. And you can't then claim that, well, I just put it out there and somebody else attacked. No, you're liable for it, right? So that's where the legal aspects of what Ore was touching on, hugely important. And we got to look at it with very fine-grained. And I bet you the whole aspect of even legal informatics is only going to grow, the importance of that, right? So all of that is what we consider under enterprise AI. And then, of course, the last bit of it is the ecosystems and the blockchain-powered ones. These are all obvious things we touched on. The last one, let me touch on it briefly. This whole idea of taking things of value and converting them into digital assets that you can freely exchange is the idea of tokens. And tokenization is not just a technology problem. It is also, the fungibility of the asset, and what are the economic impacts of that. There are a lot of important issues that need to be sorted out. But we think that the financial services and financial industry is beginning to look at this, not simply just as a cryptocurrency thing, because everyone seems to be glom to that, right, and looking at that. But that's not it. I mean, there's a lot of things that can be exchanged through digital tokens and wallets, and this is going to be an important space to look for, and one of the technologies that will be transformative. I sort of glossed over this thing very quickly, but you can go deeper into each one of these things. There are so many different areas where R&D, it's ripe for R&D, and certainly ripe for newer architectures and newer configurations of how we should do financial services. Much the same way, I mean, Christoph was sort of inspiring in how we rethink trade finance. The same way we got to sort of rethink a lot of different things, right, in this financial services space. And let me leave with, 4 goals that I'm calling it as grand challenges for the industry, right? The UN has the Sustainable Development Goals, right, which we are all familiar with. They are hugely consequential for people, right? Let's face it, right? Massively consequential for people. Even if very little progress has been made, you're talking about touching so many people's lives. This industry, right, it's not simply about making money, right? Yes, we want to be able to make money. Look at this financial inclusion thing. Nearly 2 billion people, right, either don't have credit or are underserved, right? We talked about SMEs, 220 million SMEs, no proper credit at all. And this is their pathway out of poverty. for many around the world. This is a massive problem. And you would sit back and think, wait a minute. This entire problem in many ways can be captured as an information problem. Why can't we solve this? Right? But we haven't. There are some attempts, good attempts made all around the world, but this remains a challenge. The second one is financial crimes. We touched on it. Financial crimes impacts everything and every sphere of life, right? And financial crimes, if we don't tackle that, it's going to impact productivity overall. It's going to lower the trust in the system, right? It's just going to sap all the energy out of all the creativity that could flow in. So, and look at the amount we are talking about, trillions of dollars, right? 1.7 trillion is financial crimes. And a lot of it comes in multitude of forms and is amenable to a large extent to a lot of the sophisticated tools that we're talking about, can be applied. And better mechanisms by which we can share best practices and learning. That's not happening. We talked about that, and Mariana gave us a great presentation around some of the things going on in the EU, and we talked quite a bit about these aspects as to how we can have best practices and learning be shared, right? It has to come in large part through government influence and governments playing a role as well, but also progressive companies, who are actually leaders in their spaces would also do it. And then what we refer to as invisible banking, right? This is basically banking being totally non-obtrusive. You don't even know banking is behind the scenes. But a classic example is payments. A lot of the things that you're paying for and things like that, under the covers, the banks are there. And banks know that they're going to be, they might as well embrace this rather than feeling disenfranchised, right? So you begin to see, and I was telling you about the digital shift from $4 to 2 cents to 9 cents. So how do you create more and more of these banking capabilities and make that available across industries? And that's a massive market, right? And the last one is, there are a lot of central bank governors who have actually come together and created this consortium that's advocating very clearly that climate related risk has to be first class entities in financial risk, which means we need new models to look at green assets versus brown assets, right? Assets that people are investing in, are they helpful or inhibitory to transition? Are they sustainable or not? In fact, many of the corporate boards of financial institutions are beginning to look at sustainability as the next big frontier. And that's a deeper issue. It's not just only climate, right? So that's another, so these are sort of what I call the FIGs, the finance industry goals for us. So just to get some thinking going, and these are things I think both academia and industry can collaborate on. With that, let me stop here. Questions before we adjourn? Thanks to all of you for participating in this first Financial Services Symposium. We're going to have a PhD forum just after this.